18.
Hey guys, welcome back. You're tuned in to Your Stocks. I'm Pavitra Parekh, and there's lots for us to talk about. We have lots of queries that have come through today, but very quickly, let me take you through what's going on with the market. We had seen a little bit of that recovery come through at around 130, but all of that has again been sold into. So, I mean, we're pretty much back at the low point of the day. 17,866 is where we are at on the Nifty right now, and it has been a really shaky session, right? Take a look at the financials, because that's where you're seeing a bulk of the pain come through, at least, you know, in the past few minutes. So right now you're seeing the Nifty Bank, which is 210 points in the red. The mid-cap index also, which was holding better than, you know, the frontliners, has now given up. It's around 0.25% in the red, and the Nifty in itself is down over 100 points. So we are definitely seeing some selling pressure right now, but we'll talk more about the market action in just a bit. First up, let me invite our guests on this show. We have Vijay Chopra of EnochVentures.com, as well as Ashish Kyal of Wave Strategy, to answer all of your stock-related queries. Ashish, Vijay, thank you very much for joining us today and taking out the time for our viewers. We have lots of queries, coming in, so I'm going to start straight away. The first one is from the Tech Pack, so it'll be interesting to discuss. Devika Prasad writes to us from Pune. She holds 50 shares of HCL Technologies at 1,300 apiece. She's saying that given the strong Q3 earnings by the company, she wants to know whether she should stay invested in this or should she get out and invest in some other stocks. HCL Technologies is currently around 1,090. She bought it at 1,300, so of course she's still running a loss. Vijay, let me come to you on this first up. You know, I mean, of course, she is still making a loss, but this is pretty much what we've seen across the board for IT. Do you think that, you know, if she holds on, she's a long-term investor, like she said, she could see good profits on this one?
Well, I think that, IT is a long-haul play, and as she's a long-term investor, I would say that she has to hold on to her horses. And I think that, HCL posts the numbers, because a few days back they gave a guidance that the numbers are not going to be that good and encouraging. But, very contrary to that, we saw a reasonably okay and a good result, better than market expectations. So just keep on holding. I think that the stock has a potential of going up to 1,200 and 1,250 also. So for the entire IT pack, especially the top companies, HCL, TCS, Tech Mahindra, even Wipro post the results, and the fall. I think that these are good stocks to hold on to for a longer term perspective. Even fresh entries people can make. So I see an upside in the entire IT pack. And I see a revival too, because, once the worries of war are mellowed down, there is a good possibility that, IT would start moving up again.
Okay, got it. So that is the call on IT, that perhaps this is a longer term view, but since our query has come in from someone who's willing to hold for the long term, this probably is one that you can hold on to. Let me also come to you, Ashish, on this. HCL Tech, by the way, this month it's seen quite a run, right? If you take a look at a 1 month chart, it is up 7%. Ashish, how is this looking on a more technical basis?
See, if you look at the entire IT space, there it has been under pressure for over the period of many months. But HCL Tech has shown a very good run up and then formed a good base around that 1,050 odd mark. I think the overall IT space is now turning back on the upside, and the worst is behind us. So HCL Tech is very well placed. I'm expecting that it should move towards the level of 1,200 and possibly higher. So there is approximately 20 to 25% upside that we can expect in HCL Tech. On the downside, the important support is around at 1,030 level. So as long as this level is intact, which is a multiple support price action area, we should be seeing 1,200 and much higher levels from here.
All right, got it. That is the call on HCL Tech in the IT space. But with that, Ashish, Vijay, I request you to please hold on. But for now, we do have to cut across to Shireen, who's in conversation with Sadia Zahid, who's Managing Director at the World Economic Forum. So it's over to you, Shireen.
Welcome back. You're watching our continuing coverage here from Davos 2023. I'm Shireen Bhan, and it is my pleasure to welcome BEF's Managing Director Sadia on the program. Sadia, it's always a pleasure. Thanks so much for joining us here in Davos in person after a really long time.
Very nice to be here. Thank you for having me.
Sadia, I want to talk about the global risk report that came out just before the annual meeting. You talk about a fragile, volatile landscape and a potential new era of polycrises. Given where we find ourselves today, and the fact is that you're hoping that world leaders will come together to try and ensure that we don't end up seeing a more fragmented world, how hopeful do you really feel? And do you think that we're moving towards that era of a polycrisis?
So let's talk about the risks first. We actually are in the midst of a polycrisis. We asked all of the experts that we were serving to look across 3 time frames. What's happening today, the key risks that are unfolding today, what might be happening 2 years out, and then what might happen 10 years out. Right now, energy crisis, food crisis, top of the list. 2 years out, still the cost of living, that's the combination of these things, in addition to natural disasters. And then all the way out in 10 years, there's the risk that we don't manage to mitigate climate change and we don't manage to adapt. So all of these things are playing out at the same time, but right now we're in the midst of a polycrisis, and resilience is so low that if there were to be yet another shock in this particular situation, it might be very unmanageable. And that's exactly what leaders are here to talk about. How do we shore up resilience today, and how do we start investing again for the future rather than having this short-term crisis mindset?
But is there enough confidence at this point in time, both to build on resilience as well as future investments?
So I think there's definitely areas for optimism. Let's take a look at what's happened when it comes to energy over the last year. On the one hand, yes, of course, we're in the midst of an energy crisis. But what that has created is much more momentum, investment, incentives, where governments are essentially trying to put in place the green energy transition much faster than what they were planning before. And that is already leading to a lowering of prices in a relatively short period of time when it comes to greener energy. Now, of course, we're not out of the woods yet, and there's much more to be done, and this transition will take time, and there will be people who will be severely disadvantaged, but we're towards a positive direction. So there are areas where things are changing, but it's not enough. And I think this is where that innovation, investment mindset has to come back.
Speaking of further global cooperation, China being represented here by the Vice Premier, the hope and the expectation is that with the change in policy as far as reopening is concerned, the zero COVID policy being put on the back burner, so to speak, at this point in time, some pullback even as far as tech regulations are concerned, real estate market regulations are concerned, that there is a change underway. How are you reading what's happening in China at this point in time, and what's the expectation from here on?
So cooperation is essential, and I think these can only be somewhat positive signals. At the same time, I think the jury is out as to how quickly China rebounds. We have our chief economist's outlook that's coming out today, and they have a mixed picture of what's going to be happening and how quickly China is going to be bouncing back. On the one hand, yes, of course, opening up again will be extremely important for the Chinese economy and by consequence for the rest of the world's economy. On the other hand, there are obviously health impacts of how quickly this reopening is happening, and that may need to lead to some kind of a lag in the recovery. So I think the picture is mixed, but overall, again, the trajectory is more positive than it has been before.
Let's talk about India, because India has been resilient, especially over the last 12 months. What's the outlook on India from here on?
So I think India is one of the few areas where the world can look to find a source of optimism, investment, innovation, energy, and the right kinds of future investment when it comes to human capital as well. I think the broad-scale digital investment and the broad-scale investment in education and skills will be critical for India's future growth and becoming, the largest country in the world this year. It's critical that that happens.
One of the issues that I know that you've been focused on as well is, of course, the widening gender gap. And things haven't gotten better on that front. If anything, they've gotten worse. In terms of global cooperation, to move that agenda forward, do you have any sense of optimism at all today?
So look, there's been a backsliding over the last 3 years, and you and I have spoken about this before. It's very clear that gender equality has taken a hit, like many other aspects of human development. The people that were the most disadvantaged became more disadvantaged over the course of these last 3 years. And that includes women, that includes girls, and there are specific hotspots around the world. Here in Davos, we're actually going to bring together leaders to look at how gender equality is core to the macroeconomic recovery. We have to look at this as a critical economic issue, but we also have to look at this as a leadership issue. Right? If we want to change how leaders take decisions, what types of decisions they take, diversity becomes critical, and we're going to have a big focus on how do we get to parity in power.
Well, that certainly is the hope, and we do. I certainly hope that we move forward on that front. But, speaking about the fragmented world, and that's the cautionary sort of warning that the WEF has held out as well, which has now been reiterated by the IMF as well this morning. What is that going to mean in terms of flows, in terms of trade and investment, as we see more protectionism, as we see more insularity coming in?
That economic globalization has helped lift 1 billion people out of poverty in the last 30 years. A pullback of that globalization is going to do long-term damage to the prospects of increasing everybody's living standards. So it's important that we come back to a kind of cooperation, we come back to flows of trade, of ideas, of technology, of people around the world. And yet at the same time, we also cannot quite go back to the globalization of the past. There are lessons learned about the damage that was done to specific communities, specific areas of the economy that lost out. But I think it can be done in a way that still leads to overall resilience in economies and societies rather than further shocks, because governments have learned how to provide support to specifically disrupted communities or sectors. Businesses have learned how to do this in a way that's quite different than what they were doing in the past. Overall, standards in the workforce have improved around the world. This need not be anymore about simply wage arbitrage in the way that it's been done in the past. This can really be about competition and globalization with a very solid base of skills and human capital. So it can be done in the right way. But that's part of what needs to be discussed here in Davos as well. And it's going to be a journey. It's not something that's going to change overnight, because leaders need to come out of this very short-term, insular, inward-looking, crisis-driven mindset that they've been in, understandably, given the shocks that have been happening. But now it's time to start looking again at the medium term and start looking at cooperation.
So what is the medium-term imperative going to be then, Sadia? I mean, how do we move forward down this road? How do we start this journey as we look at this new era of globalization?
So the way we look at it is the markets of tomorrow. There are a lot of basic technologies that exist already that, if they're applied to agriculture, in places like India, in places like Brazil, in many large emerging markets, technologies that are applied to agriculture, to education, to energy, to food production, to digital trade, to health and to care, to basic core sectors that matter for our societies, that matter for the planet. Applying those existing technologies, spending a little bit of time in investing in the right way, creating the right kinds of policy incentives so more private sector capital goes that way, that's where the focus needs to be. It need not be incredibly sophisticated technologies that do not exist yet. This is not only about further research and development. This is about converting existing technologies into actual well-functioning markets. That's where the hope lies for the future of the global economy.
Welcome back. You're still tuned into Your Stocks, and we still have with us Vijay Chopra as well as Ashish Kyal. Vijay, Ashish, apologies to keep you waiting, but we do have the World Economic Forum, which is underway, so there's lots coming through live from there. But let's get back to our queries now, because we have lots of those as well. Raj Sharma has written in to us from Chennai. He holds 50 shares of Tata Consumer Products at 500 rupees, and he also has 100 shares of Bank of Maharashtra at 20. He's a long-term investor, and he wants to know, the prospects of both of these stocks, whether he should hold or sell both of these. Vijay, I want to come to you first. On Tata Consumer, it's closer to 750 right now. He's made good money, but this entire year has, been quite flat. How do you look at a product like a stock like Tata Consumer? And do you think that there's more money to be made here? He's willing to hold on for a bit.
Well, it would require patience. All the consumer companies have, bear the brunt of increasing input prices. So I would say that, if he has to hold, he should hold with a stop loss of 720. There are good chances when crude is mellowing down, and we might see, the inflation also coming down. We have seen the WPI inflation numbers today. They have mellowed down a bit, and I think that in the coming months we'll see it further. So, consumer companies need lower input costs so that, they can reach out with the benefit to the end customer, and they can bring down the prices as well. So I think that this is a very pressing case where he should wait and have some patience. Keep a stop loss of 720 though, and keep on waiting. good probabilities that we might see a bounce back because the stock is completely oversold, and we might see it coming back before it touches 720. This is, I hope, but if it is touching 720, then exit.
Okay, that is on Tata Consumer. What about Bank of Maharashtra? This stock has already seen a huge run up. Do you think there's lots more to go for Bank of Maharashtra? They also posted their earnings today.
Yes, I think that it has been, in a constant up move, and from almost, we see, 17, 18 odd rupees, we have seen it doubling to almost 34 right now. I think that the double top would be around 36.30 or 37. So that would be the area where I would recommend an exit and booking profit. It's better to sit on the sidelines, especially in banks, because a decent run-up has already been seen in all these companies. So exit on rallies is the call.
Okay, exit on rallies for Bank of Maharashtra. Ashish, let me come to you on Bank of Maharashtra first. I mean, today itself, it's up 6% after its earnings, but do you think most of the rally is done?
You see, if you look at the majority of the PSU banks and especially from the mid and the small cap space, we have already seen a lot of run up in the stocks. Bank of Maharashtra, I would say, probably book half and remaining trail with a stop loss of 32, which is near the today's low. So in case the stock comes down and reaches the 32 level, then be out. On the upside, 37 is something can be the target where he can start profit booking and possibly be out at the level of 37.
Okay, got it. And what about Tata Consumer? This was the other query that he had. He has Tata Consumer at 500 a piece, and I mean, he's already made good money on this one. Do you think that this is going to take a while to really generate profits, and it's better to maybe move to some other stock?
See, if you look at the overall sector, I think FMCG and defensive sector should start outperforming now. It's quite some time. And Tata Consumer has shown a lot of time correction. If you check from the last September onwards, September 21 onwards, it has just continued to form a triangle pattern without any directional move. So yes, we are yet to see a breakout, but if we can extend the time horizon for at least 2 years, then possibly we can expect Tata Consumer to reach towards the level of 900 and much higher. But the time horizon has to be big. He has to be patient enough in this kind of consolidation. And on the downside, a very important support which is placed is around 700 to 710. So maintain that as a stop loss as long as 700 is intact. Continue to hold here, but only if you are patient enough to hold it for 2 years time perspective. We can expect a target of 900.
Okay, if you're willing to hold on for a slightly longer term, then it might be a good bet, but this is going to be a long-term play. That point is well taken. The next query is from Rohan Gupta, who writes to us from New Delhi. He holds 50 shares of Hindalco that he bought at 300 and 20 shares of Ambuja Cements at 350. He's a medium-term investor, and he wants to know what he should do with both of these investments. Ashish, Hindalco has seen a good run. I mean, the entire metal space has been rallying, but Hindalco in itself is up around 35% in 6 months. But these commodity plays can be quite tricky. How would you look at this one just on a technical basis?
Yes, see, if you look at the entire commodity space, it's highly volatile. So it can be tricky for sure. But right now, since it is forming higher low and maintaining that trend, which is suggesting, as per a simple Dow theory, that the trend is positive, I would suggest continue to hold on to Hindalco, but maintain a stop loss of the level of 455, because that's where the recent low was formed on the daily chart. So 455 can be the pivot level. Maintain there as a stop loss. Hold on for here because it is still not shown any sign of exhaustion or divergence so far. And as far as Ambuja Cement is concerned, we can see it formed a double or a triple top around 590 levels, seeing some kind of a pressure here on the downside. So hold on for now, but maintain a stop loss of 490. In case Ambuja Cement breaks 490, then we can start seeing some strong selling pressure. So hold on for 490. Possibly the stock can show again 560 levels on the upside.
Okay, got it. That is on Ambuja Cements. Vijay, I'm going to ask you about Ambuja Cements first. And, the cement pack overall, how do you look at this? There have also been multiple reports that, we could see another price hike in the coming few days. Do you think in that context, also ahead of the budget, these are perhaps good stocks to keep and not sell, at least right now?
Well, I have a bit of a longish view on that. And I think that, the government has no other option but to invest in the infra space, because we are running at an unemployment rate of 8.5% already. And if at all India has to grow with 7% growth rate, we need to invest in infra. for other reasons also, and also because infra gives a lot of employment. And when there is a budget outlay on infrastructure, we will see cement and steel both being used extensively. So I think that there are good options available. Ambuja is also one of the good companies, especially after the takeover. And I think that companies like Ultratech, Grasim, these are great companies to have in a portfolio. So, keep on accumulating, nibbling into the stocks. Nobody can predict the top and the bottom of any company. But yes, I think that, I think Grasim, Ambuja look very good. India Cements looks very good with the southern perspective. And, you can start nibbling into these stocks with the budget perspective as well. I think that there should be a decent outlay for infrastructure.
Oh, absolutely. And that's normally what does come through in the budget, at least, right? You do see that, well, at least immediately you do see the infra stocks which do well because of the push that comes through from the government. But on that note, we are going to wind down on this edition of Your Stocks. Vijay, Ashish, thank you very much for taking out the time and, helping us with all of these queries. We are out of time on this show. The Nifty is currently at 7,876. We're below the 100-day moving average, just around 100 points away from the December low, that is 17,774. So do keep your eye out on the market. It's been a volatile session. If you have any queries, you can email them to us and we will take them up with our experts. Closing bell comes up next for the last hour of trade.